these sessions, whether they be from faculty or staff, represent their personal views and don't represent the views of SUNY Geneseo. The comments and discussions are not intended to provide you with any investment advice. Prior results are not indicative of future results. Investments may lose value. Members of the fund may have similar or exact positions or opposite positions that the fund may have, and our activities are our own, and that's the disclosure. And the reason we have the disclosure is that we run the fund as a wealth management firm, and whenever you're doing a presentation, you need to make the proper disclosure. So Connor, I'm going to turn it back over to you.
Thank you. Yes.
It's Professor Chinmay, are you here?
Yes, I'm here.
Okay, why don't you introduce yourself? We have another faculty member here, our newest member of the faculty, and he's going to be joining us. And why don't you just introduce yourself, a little 2 seconds of background and what you might be working on here.
Hello, everyone. So I'm Chinmay Jain. I'll be teaching finance courses at the SUNY Geneseo. Before that, I was working for a Canadian school, Ontario Tech University. So I'll be teaching courses on investments, and I also do my own investing. I invest in stocks, options, real estate. So I think slowly I'm going to get involved with SMIF and also with the trading competitions or investment competitions that Geneseo teams take part in. So that's why I'm here, to learn how this fund is managed, and I'm going to actively participate in going forward.
Excellent. Thank you. Connor, it's all yours.
Glad to have you. Oh, for support, I guess the professors are going first. Why don't you introduce yourself?
Oh, for those that don't know, I teach finance, organizational behavior, and I have the opportunity to be the advisor to the Student Managed Investment Fund. And I'm also the director of interns, where I coach individuals on finding their opportunities for future growth and development.
All right, so we got the professors out of the way. My name is Connor Hargrove, and if you could not tell, I'm the president of the Student Managed Investment Fund here. I'm currently a senior economics major with a finance minor, and I've been doing this club since the first meeting of my freshman year. Have loved it ever since, and I think that it's a great place to get involved. So what are we? We are, as in our name, a wealth management fund that is managed by students. So what does that mean? We have a client, the Geneseo Endowment Board. The endowment has given us, I forget what the original amount was. Wasn't it 250,000? 100. Okay, 100,000. We were originally given, when the club was founded back in 2008, $100,000 of real money that we manage on their behalf. We don't spend it on stuff. We manage it. So it's still basically saved, for lack of a better word. We, as students, what we do is we collaborate and work with each other to invest that money into stocks. These, or potentially mutual funds or ETFs, which are, for those of you who don't know, kind of groups of stocks that are kind of grouped into one. So, and we invest in all kinds of different stocks, big companies, Microsoft, Apple, just to tiny companies, Cellus Life Sciences. We have all kinds of different sizes. Okay, so what does that mean also? So through investing in stocks, we have taken $100,000 originally in 2008, and through generations of students and through our hard work and research, we have grown that money to, I believe that the value today was $353,000, I'm pretty sure. But obviously the market fluctuates, so that number has been as high as almost $400,000 very recently. So we have obviously done very well for ourselves, and for a couple of kids making, close to $300,000 is not too bad. This work may sound intimidating. I assure you it is shockingly easy once you learn how to do it. And for those of you who are sitting here thinking, oh, I want to show up here because I'm interested, but I really have no idea where to even begin with stocks. I don't even know what a stock is. We can start you from there. There's no assumed knowledge level with stocks at all. I knew nothing when I came here. We teach. The best part about this club is that it is first and foremost an educational club. We teach you everything you need to know about investing. In fact, I learned more about investing here than I did in my finance classes. And I knew before I even took my first finance class, I knew a lot about investing. We teach you a lot. How it works is that it's actually it's a mix of student-led, where you can take your own initiative, and we also give ideas out. We'll talk more about this later, but we break all of you into groups. There's different groups that focus on different areas. There are groups. The core part of the group are the analysts, research analysts. This is what the majority of you will be. You will work together. You will get into smaller groups of kids, teams of 4 to 5 students. You will work together on a stock pitch. You'll either come up with a company on your own or be given a company by us. We'll give you a company. You'll work together to research that company. You'll go crack open the financial reports. You'll read the business description, read about the kind of products the company makes, where they grow, who their customers are, the clients, who they compete with. You'll figure out who the company is, and you'll decide whether or not we should invest in that company. If you think after doing some preliminary research that, oh, this company would be a good investment to make, I think we should buy this stock, you will follow through and put together what's called a stock pitch, which is a elaborate PowerPoint deck that talks about what the company does for the rest of us. So you'll go, in previous years, it was an in-person, obviously, presentation, but we will be on here and put the slideshow up and share a screen, and you will educate us about what the company does, how they make money, and then we will, as a fund, collectively vote whether or not to buy the stock. In terms of the different strategies that we use, the fund invests in a number of different time frames. So some stocks that this is traditionally what the fund has done more, for a long time, is we'll buy a stock to hold it for years, right? To make a long-term investment, make a strong, stable play, a company that we think is going to grow over a couple of years. Over the past 2 or 3 years, though, we've also included a few short-term plays or swing trades, where more senior analysts bring forth ideas to the investment committee, which is the leadership of the fund, of the club, with ideas that they think, a company might, release an earnings report that's where they tell us how much money they made basically over the past quarter of a year. And if there's an earnings report coming out, the stock price might change a lot. So we might try to buy a company, make a short-term position to make money that way. Lots of different strategies. So the core of, and again, all of these, everything if I just said, if it sounds foreign, trust me, it gets much, much easier. I think that there's fantastic opportunities in this club. What you learn here, the skills are, as I'll discuss more later, very much applicable to the real world, applicable to your classes. And in addition to, besides just stock research by itself, we also have a number of other groups, including an economics group, which I had directly, which does a lot more big picture research to aid the stock analysts to kind of figure out how the global economy fits in, which I'll talk more about later also. We also have an accounting and compliance group, which does a lot more kind of behind the scenes work, but also offers vital help to the analysts, puts together financial reports for us. Does a lot of important work that you'll hear about very shortly. Yeah, and actually on that, I think that is a good intro spot. So I will hand it off to Dylan.
All right, thanks, Connor. My name is Dylan O'Leary. I'm a senior accounting major, and I am the CFO / accounting and risk leader for SMIF. So what we do every week is we give a scorecard and a brief update on how the portfolio's been doing over the past year and the past month. So I'll do that now. Okay, so this is all the work that accounting and risk does. I just want to introduce all the people that are involved. I'm the CFO, the healthcare research liaisons. All our liaisons are senior accounting people that are broken out to help the groups, and these are the direct contacts for the research groups. So for healthcare, it's Jillian and Matthew. For the economic group, it's Nick. For technology, it's Christina. And for the alternate group, which will encompass probably the majority of everything else that's not encompassed in the first three, is Christopher and Joseph. So these are what our scorecards are going to look like. You're going to see these every Wednesday. This will give us the breakdown of how we are doing in the current month and how we're doing since our last end of year, which we end our year on August 31st. So right now, our current year to date is matching our September because it's been the same amount of time. So we have lost a little more than 3.5% in the 3 weeks of September, but that's really not as bad as it sounds, because compared to our benchmark, which consists of the S&P 500 and the S&P 400 mid cap, that we were expected to lose 5%. So we're beating our benchmark by 1.5%. So the goal that we have here is to constantly be beating the benchmark. These are our sector breakdowns. These over here are the monetary values that we have in each sector. And then I have the percentage breakouts. And the new strategic, originally what we did is we used to judge what sectors we should be in based on the S&P 500 and 400. But we decided that in light of the pandemic, we need to revise it. So we had a bunch of senior people in SMIF do a poll and a vote and truly evaluate what we thought, which sectors we should be in and which we shouldn't. So as a result, we got totally out of energy and we started looking more into healthcare. Up here are September equity activity. This is all our buying and selling. The majority of this movement is technical trading, which I'll get into shortly. And the only official sale for the club as a whole has been BABA, and that was a long-term investment that we've gotten out of. Now for the technical trading, and what this is run by AJ's group. And what he does is he looks at technical charts and he makes judgments and he makes plays on stocks that he feels are about to break out or have jumps. And as you can see here, is we've been highly successful using this, and we started it over the summer. We average 4.37% return every 8 days, which annualized comes out to almost 200%. Even though that's not really sustainable, it shows you the pickup that we can make in technical trading, and that's why we started doing it. These are all of our holdings, so you can get an idea of what the SMIF holds. Every yield beta is a measurement of risk, and then we have our weighting, and then we have the weighting of each beta, which gives us an idea of the risk associated with our positions and how we compare to the market as a whole. And then this will show us our unrealized gains and losses on every company we hold. More important though is our sector breakdown. This is constantly subject to change. If we feel that a company has traditionally been in financials, but maybe they don't fit the same business model as others, for an example, like Visa and BlackRock do different things, even though they're both considered to be in the financial industry in that sector. All right, so just to give you guys an idea of some of the holdings we have, our top 7 holdings consist of $144,817. And our top 7 positions currently consist of 36% of all of our assets. So we are a little top heavy, but that's not a huge problem. Here are our top 7. Our number 1 holding is Apple. Just under 25,000 is our current market value as of close yesterday. For those of you that don't know, Apple is a tech company. They make the iPhone. And our investment thesis for this, and the reason we currently hold the position, is we feel that going forward, a company like Apple is going to see success due to people buying iPhones and gadgets and technology. And we don't see that changing anytime soon, even in light of the pandemic when all this stuff was reviewed. Our second biggest holding is Visa, which is just under 18,500. And what Visa does is, I know everybody knows that they're a credit card company. What they do is they process transactions, and currently only 20% of all transactions around the world are electronic. And I think it's pretty fair to assume that it was an upward trend anyway, and with the pandemic, it'll only speed up. Therefore, there'll be more online transactions, so more processing should occur. Therefore, Visa should do well. Waste management is a big holding, and it's more of a safer stock for us. You're not going to see any big jumps. Usually tends to follow the market pretty well, and Waste Management is just a garbage company pretty much. So they pick up the garbage from the side of the road, they do recycling, but it's more of to mitigate our risk, and it's a safer stock that we hold. Then we have Zoetis, which it was a different way of looking at healthcare. They do healthcare for animals and livestock. And the idea here was that they're the leader of healthcare companies as far as livestock are concerned. And we wanted to be in healthcare, and we wanted to look beyond just human healthcare. So Zoetis seemed to make sense with the philosophy we're following. And then BlackRock is your typical financial firm. And the reason we hold them is because of their size, technology, and growth pattern, which gives them a competitive advantage over their competitors. So we're more holding them, and we've held them for a while. Our sixth largest is Intuitive Surgical. This is a play that is highly based around the Da Vinci surgical system, which is the system that allows doctors to operate remotely. And that technology all comes through Intuitive. And we also expect that more surgeries will be happening that are elective as the country begins to open up again. And then seventh is Constellation Brands, which is a beer, wine, and spirits distributor and producer. And they're famous for their beers such as Corona, Pacifico, and Modelo. And then they have, I believe, they have Kim Crawford wine is a big part of their holdings. So we hold them for the reason that people drink alcohol. They are the best company currently in the market, and they have exposures into cannabis, and with legalization coming, that could be an area of huge growth. And they have heavy investment in a cannabis company called Canopy Growth.
And if you guys were not aware, Constellation Brands is actually headquartered in Victor, New York, right here outside of Rochester. They have a lot of alumni that work there, and they actually come, well, in the old world, they come and meet with us on campus a lot, but we have a lot of connections with them. So they're also a company that we talk about a lot in the fund.
And they will be joining us on October 8th for a virtual meeting. And we do got to acknowledge Kaya and Kamal and Kyler were interns there that summer. And Kyler is here with us, and he is actually joining them full time. So we have a strong connection to them. Go ahead, Dylan.
Okay. And then the last thing is just a more in-depth look at the technical trading. So you can see how quickly our movements are. AJ makes the decision that he finds a company he likes, I think it's going to jump. And then what he does is he invests a portion of the portfolio that is allocated to him into it. And then he makes a decision on how much of his allocation he wants to invest. And then usually we don't hold, like this 20 days is the most you'll ever really see out of these types of trades. These are meant to be very, very quick turnarounds to capitalize on earnings or just technical trends in general. As Save and DocuSign are two that are currently still outstanding that we're waiting for. And DocuSign seems to be poised for a breakout and has been doing well the last couple of days. So hopefully that one pays dividends shortly. So I believe, AJ, are you going next?
Will's doing that tonight.
All right.
You want me to go? Whoa, I'm gonna close my door, hang on. I just heard myself, I was like, nope. Okay, let's share the screen. All right, everyone, I'm just gonna give a quick rundown on some really basic level technical analysis tools that we use. I'm just going to show you Microsoft right here. This is a 180-day view of Microsoft stock performance. Let me zoom in. Each of these is called a candlestick, and it represents a 4-hour period of movement in the stock price. And each of these dark periods is a nighttime, and then these are the actual day periods. So zooming back out, what we're looking at here is essentially, this is the 200-day moving average, simple moving average, and what that is an average of, so for this candlestick, the moving average is down here, and what this represents at this point is an average of the 200 previous candlesticks. Looking at the price, this is an average of this price for the previous 200 candlesticks. And what that can give you an idea of in a long run is if something is trending up, you'll see it often trending above the 200-day moving average, signaling that it's still trending upwards above its average over the past 180 days. And then this here is the, what do I have it set to? 90-day moving average. So something a little bit more brief in its agitations will give you a much more precise and current reading. So when you look at this in conjunction with each other, you can get an idea of if it's trending above the long-term and the short-term moving average. That's typically a sign that you're having an uptrend. Jeez. It's typically a sign of an uptrend. And so typically a sign of an uptrend. So we use that in conjunction with pitches to decide whether or not, if we like the company and we want to buy it, that's something to begin with. But then when you look at entry points and exit points, maybe sometimes with the use of technical analysis, you can decide, oh, if the company's down here at the time that we decide to buy it, it might be better suited to wait and see if we can break above one of these moving averages and show signs of an uptrend. And here, let me give you a view of a downtrend. So this is Tilray, which is a marijuana company. And as you know, those are extremely volatile, or may not know, those are extremely volatile and often represent downtrends. And this is the exact opposite of the Microsoft I just showed you. So you have it below, currently below the short-term and long-term moving averages, representing a downtrend. So if we were to decide, hey, we want to buy Tilray right now, it might be in our best interest to potentially wait and see if it could break above one of these moving averages and show signs of a reversal of overall direction. And that could just be beneficial, and say we bought it now and it just continues to downtrend for an extended period of time, we could lose a good portion of our principal investment. And that's my view on technical trading. AJ has been doing much shorter term investments, but I personally like using it in conjunction with the fundamental analysis to really try and dial in our entry and exit points. And it gets a lot more in depth. You can use things like the RSI indicator, the MACD indicator, you have volume indications, Bollinger Bands. These are all different studies based off of trading size and price movement over different periods of time. And I'm not sure who I'm supposed to pass it off to, but that.
Are we doing econ next?
I'm sorry?
Professor Boyd, are we doing econ next? I think we're.
Or any questions? I don't know.
Questions are, that's the breakout groups are for.
Fine.
Stay tuned.
I'm just going to cut off of this then.
Connor, you want me to pull up the PowerPoint?
Yeah, go ahead and share it. Okay, so now we're going to be talking about the economics group, which, as I said earlier, I'm the head of. In addition, we'll have the other guys will introduce yourselves, guys. Whoever else is in there.
So my name's Nate. I'm a senior economics major and finance minor.
Hey guys, my name's Tanner. I'm a business admin senior.
What's going on, guys? I'm Pat. I'm a senior business administration major.
Oh, you did make it. Good job. All right.
Yep. I finished up.
All right. Yes. So economics group, what do we do? Like I said previously, our main goal, we have a number of different goals, but our main goal is to offer kind of a macro picture view of the markets, of the economy, to you, the analyst, to give you advice that could help you when picking stocks and finding investments. And we'll get into more of that in a second. But for right now, who may not know about the economy's impact on the financial markets. So if you think about it, the two traditionally are very much intertwined. If the economy is doing well, that means people have jobs, they're making income, and they're spending it, right? They're spending their money because times are good. And when they spend their money, at companies that sell things. So those companies traditionally, those are the stocks we buy. And, when the economy is doing well, stocks usually go up. The opposite is usually what's supposed to happen during recessions. During 2008, the 2008 recession, stocks went down significantly. So right now, in case you all were not aware, we are officially in a recession. We've had 2 consecutive quarters of negative GDP growth, which means the economy has officially declined for a half year straight now, because of the pandemic. And so what that meant was that back in March, officially when quarantine was starting, we were all in the panic was initially starting. The stock market lost about 30% of its value. I want to say it was over the course of 2 or 3 weeks. The numbers around there. Complete and utter panic. We certainly sold a lot of our positions. Huge market sell-off. I remember sitting in a doctor's office and watching on my phone. I actually had to go get my blood pressure was getting taken like in 10 minutes, and I was looking at my phone. I saw the stock market drop. It had dropped between 9 and 10%. That morning. And I actually, when I went to go to see my doctor, she said my blood pressure was a lot higher than it would normally be expected for my age group. And I had to apologize because I had just seen what happened. Anyway, but what happened after March is something that was very unexpected. Starting at the beginning of April, the market bottomed out and we entered into essentially a new bull market. The stock market has gone up pretty much all summer. In fact, the tech companies especially are now worth more than they were before the crisis. What does this mean for SMIF? It means that while the economy has declined, stocks have continued to go up. There's been a disconnect. So we as the econ group have to work to figure out how to navigate the SMIF through this market. Try to figure out, are stocks going to keep going up? How are things going to react? Is unemployment going to keep ticking down slowly? Trying to figure out how these things work together and how they affect the share price performance of our investments. These are the kinds of problems that we'll generally work with in SMIF. I'll hand off to the next one.
So to piggyback off that, we want to get a macro view of our economy. And so we're going to follow indicators. And the first indicator we're going to follow is the labor market. And that's broken up into many things. First and foremost, the unemployment rate. It's important to know what percentage of our workforce is unemployed. Additionally, we'll follow the diffusion index. That just shows the percent of firms that plan on hiring in the future. And that's important because it gives an outlook on jobs and if we can expect them. When looking at that, 50 is the magic number. So greater than 50, firms plan to hire. Lower than 50, firms don't plan to hire. We'll also look at jobless claims. That's been important since COVID hit. In March, it tells us if people are getting laid off and they're filing for unemployment. And then additionally, we'll look at the labor force participation rate to see the trend on that and if people are participating in the market. There are other indicators associated with the labor market that we will also track, but to start, these are 4 main ones that we will follow. We decided to include this graph just because it gives a little impact. It shows the impact of COVID. So this is a 20-year graph starting in August 2000 going to August 2020. You can see that even back in 2008, unemployment, it hit about 8%. But then when COVID hit in March, it spiked all the way up to just below 15%, showing the severity that the pandemic has had on our labor market and unemployment in our country.
So another important economic indicator that we will be following is GDP. So consumption is one of the biggest ones, obviously, in what people are spending their money on, what sectors they're spending their money on. The airline industry is taking a big toll on everybody right now, and no one's flying. And we'll be looking into where people will be spending their money in the future in order to get a grasp of what the consumers are looking into. Another thing would be domestic investment, where are people investing their money via the country as a whole, in the United States and elsewhere. Another thing, government expenditures. What is the government investing their money into? We'll be looking at the Federal Reserve, and where their interest rates are. They're going to be ultimately low, as they just came out with that news. But we'll be keeping a close eye onto that and where that leads, as well as imports and exports, and to grasp a general knowledge view of where the country's headed and where the future will eventually hold in America.
So another thing we're going to do as the economic group, we're going to apply the economy to growth strategies. And by that, we're going to be analyzing all the different sectors from our economic viewpoint. And we're going to project which sectors possess the best investment opportunity moving forward. So we're going to pitch those ideas to the other groups. For example, like healthcare or technology. With technology, obviously, since from the impact of COVID-19, everybody's been working from home. So technology has been on top these past couple of months and could be for the future. So we're going to help project those sectors and look for investment opportunities for everybody else.
And then to end this presentation, we created a Twitter account. The handle is @economicsmif. You can see it on your screen now. Basically, what this Twitter account will be doing is daily or weekly analysis on current news and events. We will also repost relevant information, articles, blogs, anything that's relevant to what we are tracking, what we think would be important for others to know, to see, to read, and then we'll give a commentary on that and how it pertains to SMIF, the economy, and the growth objectives we hold in this club. When we go into breakout rooms, we love to have you come join, get to know us better, and it's been nice seeing all new faces.
Maybe AJ, you can show us your Twitter. Are you still here? Yeah, show us your Twitter now.
Got you. Just give me a second, I'll pull it up. All right, so we made this about, I'd say around like September 1st, basically when we got to school. So I've posted, let me go to the bottom. Basically, I'm just using the TrendSpider platform that we got for the technical analysis group and just trying to like pick plays off stocks that come across my screen. And this is where our group kind of keeps track of all like the research that we've done and learning about it. It ranges from just using the simple moving averages that Will went over to more advanced stuff like anchored VWAPs and like volume profiles. So,
and what's your reach on this?
It varies. It goes from like 100 views on the minimum to like 10,000.
Okay. So more than people at Geneseo are looking at this.
Yeah. Like I'm pretty sure like half the followers right now aren't from Geneseo.
So everybody's invited to follow. If it interests you, follow them, and you can learn a lot, and you can reach out to them. So right now we have 2 Twitter accounts. So follow us on Twitter.
Yeah, I'll put the symbol, the ad in the chat.
Yeah.
Those
And
of you who are
Nate,
not
you
aware,
could maybe do the same thing.
yeah. Oh yeah, Nate could do that. We also have for SMIF, we have a Facebook and a LinkedIn account. So for those of you, definitely encourage you to like and subscribe. And especially for the LinkedIn, it's very useful for those of you who want to build your LinkedIn profiles. SMIF, obviously a fantastic inclusion on your LinkedIn profile. So please connect with us, if you will. All right, who's next? Is Tech next, or who volunteered to?
I think we start with Dan, right?
Yeah, I can talk about healthcare a little bit.
Sure.
What?
Can you turn your sound off, Will?
Yeah, sorry. Will, all right, give me a second. Will's sound is on.
Oh, the joys of Zoom.
All right, I got it. Yeah, so I'm leading healthcare this year. There's going to be a lot of changes in healthcare now with coronavirus going on. There's going to be a lot more technology involved, where it's like a lot of work, healthcare from home, aspects like that. So there's a lot of change and growth in healthcare that we see. So that's one of the sectors we want to focus on the most. So if anybody's interested in healthcare, there's a lot to it: pharmaceuticals, technology, really anything you can think of. There is a healthcare sector industry for it. So if you're interested, let me know. You can join.
For those of you, I think the question came up. Yes, Professor, I think we can get the slide decks out to the students at the end. I'll have them send them to me, and I can send out the link at the end. So yes, we could do that. All right. Kai, you want to talk about tech?
Yeah. I represent, or I'm part of the technology group. Like Dan kind of touched on, technology can be involved in healthcare, but a big issue that we've been grappling with is making that distinction between, is it healthcare or does it just use technology, or is it actually a technological advancement? And that's really what we've been focusing on within the technology group. But the biggest thing that we've been looking for is innovation. Through COVID, there has been a need for different technological advancements. And I think one of the ones you guys heard about tonight was DocuSign. Basically, that's a company where we can now get electronic signatures that are now incredibly unsecure, so that it's now safe for COVID people. If you guys are interested in technology, we do a lot more than things that are just related to COVID. So if you guys are interested in that, definitely come and check us out during the breakout group, and we'll be going more in depth into DocuSign and talking about more of the companies that we're interested in for this semester.
All right, thank you. We missing anybody?
David.
Yes.
Oh. Hey everybody, I'm David, and I am part of the alternative investments. And basically what we do is we just do everything that was not mentioned before. So right now we're looking at American Express and other financial stocks. And yeah, basically if accounting finds an error or they see a high risk area in our portfolio under the betas, they'll bring that to our attention and we'll review it. Like we just sold Alibaba after accounting saw a high beta, high risk area, and then they brought it to us, we discussed it, and then we ended up selling it. But we also can basically pick any companies we want to research. And if we think there's a buy opportunity or sell opportunity, we can also discuss those.
Yeah, that's good. Maybe we can get Sean, Sean, you're here still. Maybe just share a brief, how you approached Insulet, which we agreed to buy, and some of the things you did to learn about the company.
Yeah, so one of the things that approached Insulet Corporation was realizing that it's not a healthcare company, it's a technology company that provides healthcare services. So that's one of the major things that the healthcare sector, which I'm a part of, that's what Dan, Zach, and Christian have realized over the past 2 weeks that we've been meeting. So I would say that's one of the things. And approaching my presentation today, the main focus point that I need to get over was just what does the company do? What services do they provide and stuff like that.
Okay, and how did you get some of your information?
Some of the information, I went on a run and I decided that I needed to call the company.
Yeah.
So that's some of the information because I wanted to figure out how much does one product cost. So, and none of the, any analysts had the information, so I just decided to call them, and a sales representative were happy enough to give me that information.
So that's what real analysts do, is call the company, talk to the company, suppliers, other users, and users of product. And we heard users of products. Austin, are you there? Maybe you're not there.
And not that we're, expecting you all to, to phone companies, but it's just an example of the kind of different things that we're able to do here in the fund, and the kind of skills that we teach you. And believe me, in the coming meetings, we'll teach you. I have many meetings about how to do stock pitches. It's very just introductory today, but we'll get into that. All right, is it time for the call to action and the.
Yes, you. Let's see how
all
this
right.
works.
All right. So first things first, I'm going to give a 30-second interjection here. For those of you who have not been a part of the SMIF before, actually, you know what, just to be safe, let's have everybody, can you put your email address? Oh, wait, actually, no, hold up. Jillian and Christina, can you take over for this? What's going on with this situation?
So I'm going to send a link to a Google Sheet, and you're going to put your name and your email on it.
Yeah, we're going to do that. So do that. We're going to wait for her while we're doing that. Yeah, here, just because I know attention's probably going to be gone here for a second.
Sorry, just really quick. If you are interested in a particular sector that we just talked about, if you could just write that next to your name, that would be super helpful for us. So.
Yeah, if we could get